Good afternoon, everyone. Thank you for attending the inCase webinar on utilising tech when renewing professional indemnity insurance and the strategy for law firms. The basis of the discussion is going to be around looking at the renewal process and obviously coming into the season and what strategies we can get, not just about technology, but generally what's the ethos, what's any tips and strategies that we can use to try and implement to get the best outcome in regards to proposals and renewal premiums. I'm very glad to welcome Gareth Milner here, who is the Managing Director of JM Glendinning Insurance Brokers. And also Amanda Amble is going to be joining us in a few minutes, who's the Operational Project Manager of Chadwick Lawrence. And I'll pass over to both of you in a minute just to give a bit of an introduction about your job and the businesses. Anyone who doesn't know, I'm Rob Hosier. I'm a director at inCase. I'm what you call a recovering lawyer, not a failed lawyer. I have to make sure that's known. My job is trying to work with over 130 law firms now that are using inCase to a certain degree, and also supporting them on their journey of their PIR renewals and trying to make sure we can get the best premiums for them by utilising the risk mitigation benefits of technology. So, Gareth, if I can hand it over to you and just give me a bit of introduction about your role and the business, that'd be great.
Yeah, of course, no problem. And thank you for that, Rob. I'm not quite sure what the timescale is to go from being a recovering lawyer to a recovered lawyer, but let me know when you get there. And definitely not a failed lawyer. I've not heard anyone describe themselves as that for a while. For those of you that don't know me that are on, I'm Gareth Milner. I look after JM Glendinning's professional risks business, the bulk of which specialises in exactly what today's topic's about, professional indemnity insurance for law firms. We look after just under 200 law firms now for professional indemnity insurance. The bulk of the clients that we look after are around about 2 million to 50 million fee income businesses, anywhere from some sole practitioner and startup firms all the way through to top 100, but the bulk are in that 2 to 50 million turnover range. The bulk do quite a bit of conveyancing and have seen an interesting time throughout the economy and COVID and everything that's happened recently. So yeah, just hoping to be able to give you a steer as to what we see coming up in the insurance market, in particular how insurers and the PI market are looking at technology issues and how firms are utilising that to address risk. And no doubt there'll be an interesting chat from there.
Brilliant. Thanks, Gareth. Well, just to let everyone know, there's going to be a Q&A section. So I think down the bottom, you'll see this Q&A. Feel free to ask any questions and we'll answer as many as we can. We've already had some questions from some of our existing firms that they've asked me to answer. So I'll go through them at the moment. I want to aim for us to kind of, be about 30 minutes, 45 minutes max. And I think, the more about the quality than quantity, but we'll go through the first few questions and wait for Amanda to join us. I think she's having a few technical difficulties. So Gareth, what's the landscape like at the moment for PIR renewal?
Yeah, pleasingly, Rob, I can now report some better news than I've been able to for firms over the last 3 or 4 years, I guess, really, for most solicitors. In that, I'm sure that everyone that's here probably knows PII has been quite rightly maligned in some ways because in the last 3 or 4 years, the market has probably overcorrected on premium. Most firms have experienced rate increases in the order of 10, 15, 20%. I don't quite believe some of the sort of stories that many will have seen on the Gazette that the professional indemnity renewal put 37, 38 law firms out of business last year. It might have been the straw that broke the camel's back because it's a huge cost and a huge burden, and we get that. But without doubt, firms have experienced some pain on premiums in the last few years, and that's starting to get slightly better now and is going to hopefully markedly improve with the 1st of October renewal that's coming up. For nearly all firms, rates that insurers are offering are starting to stabilise. Every insurer that we speak to, which is most insurer in the market for law firms, is saying to us, we've got the books of business that we want and we're collecting the premiums we want for the firms that we currently look after. For insurers are coming to us now and offering 18-month deals in many cases, and we're seeing rate stabilisation. There's a potential new entrant or two coming into the solicitors PI market inside the next 6 to 12 months as well. But to go against that, I guess, and just to present the thing that's kind of on insurers' minds, conveyancing claims still have a very high frequency. Law firms still experience more claims than any other profession. And things like wrongful funds transfer and cyber claims issues and the cost of those claims are still on insurers' minds. And of course, we still have, depending who you speak to, a potentially bleak few months or years of economic conditions coming up as well. And they always influence insurers. So it's a bit of a mixed picture, but I think that most firms can probably expect to pay a similar rate that they paid last year. In certain cases, they'll see some more competition for their business. And these things run in cycles. So no doubt over the next 2 or 3 years, it will become more competitive. I think we can say with a degree of certainty now.
So is it fair to say then, Gav, that the kind of challenges that law firms have had over the last few years, that we've kind of hit a peak of that, and that now we should start maybe getting a bit easier to do renewals?
Yeah, I think that the challenges that cross all the entirety of the market have certainly eased off now. You know, the big one was obviously COVID when it's in its infancy, when no one knew what the world would look like, matched some economic challenges, and also the fact that if you go back beyond the last 3 or 4 years, so if you go back 6 or 7 years, yes, most law firms still paid a big monetary amount for their PI insurance, but the rates were relatively benign and there was lots of choice and they were able to have competition from insurers. So it's gone from a very benign market that was quite competitive in terms of the number of insurers to overcorrecting, and now it's going to become sort of more benign again, we hope, and it is just going to be driven by that piece of more insurers coming in, more competition. So yeah, I think the challenges across the market are getting easier, but it does depend on the makeup of the firm as well. If you've got a particularly poor claims history or you've had some trouble there, if you do 40-45% of conveyancing plus, you might still find it difficult at this renewal to generate some competition from insurers. There's no doubt about that.
Right. And on that basis, and what are the, apart from kind of work types, etc., what's the biggest challenges regards to PI and renewal this year?
As in any year, really, I think the sort of 3 things that insurers will always look at when they're looking at a firm's proposal form will be the fee income, the work types, and the claims that they've got. And to a degree, you've got to almost look at that as operational cost if you're a law firm, because you can't change the profile of your practice overnight. You're not going to reduce your fee income. You can't change any claims that you've had. So it's a case of looking around that about how do you get your story across to the underwriters? How do you make sure that's properly heard, especially in a market where we've maybe got, 5,500-6,000 firms that still renew on the 1st of October. And the bulk of the legal profession is made up of smaller firms still as well. I think it's still 7,000 firms that are less than 6 partners or something based on the statistic that I last saw. So yes, firms that are larger and have more fee income will pay a higher premium, but the bulk of the market that's driving behaviour and insurer response is still firms under 6 partners.
So even for the firms that are under 6 partners, what would you say is the most common mistakes a law firm would make when they're filling out their proposal forms?
I don't think it's mistakes as such. We're gone are the days where firms had to fill out a different proposal form for every insurer. And very rarely do we see hand-completed proposal forms where firms haven't paid attention to them now. That used to happen 5 or 6 years ago or more, but it doesn't now. Most firms are reasonably sophisticated business. They can use certain types of tech to assist them with the proposal form. And most proposal forms that we see are pretty professionally completed. If there's a bit of a sort of gap or a blind spot, where that is, I would say, is that kind of little X factor piece of going beyond the proposal form and how do you make sure that you stand out to an underwriter. And I guess the ways that firms can do that are by engaging better with brokers, ensuring that they're giving underwriters additional information through the use of tech, which I'm sure we'll come on and talk about, other bits and pieces that they do as a firm that really get across to the underwriter that's maybe got, 30 applications to look at that day, what's unique about them and why they should write that business.
Yeah. On that, I was, last week I was with one of our firms, and I think they're actually on the webinar, but I'm not going to name them. We were talking about PII renewal, and they were saying that they really struggled to understand what supporting material they should put with the forms. They kind of just always just filled out the forms and then sent them in. But have you got anything that you would say that you've seen that, a support material works really well, or what should always be mandatory included as supporting material?
Yeah, so I'll preface my answer to this by saying that you've got to think about what the underwriter's definition of risk is. Because my belief from a commercial perspective as a business owner and someone that runs a business is risk is actually a good thing if it's managed correctly and understood. And every firm has to take risks of some kind. Everything you do every day is a risk because you want to grow and develop and you need to be successful. So in the broad sense of that, it's not for your insurance to prevent you from taking sensible commercial risk. When you think about an underwriter who's perhaps sat in London and has dealt with solicitors PI for a long time, risk to them means something very different. Risk to them means if I take on this piece of business, or if I renew this piece of business with my law firm and provide insurance for them, what are my chances of getting a claim? So that needs to be phrased to the underwriter in such a way as making a law firm stand out from their peers. And the ways that law firms can do that are, number one, engage properly with your broker. And it is not just a sales exercise for me and JMG, because there are more than just us out there that do a really good job in the solicitors PI market. But again, it's difficult for brokers when they're renewing lots of business to, certainly when you get into sort of, August and September, to really enable and allow firms to stand out. So I think that work needs to be done away from the PI renewal to properly sit down and pay some time and attention to what can we put into our submission here that really enables us to stand out. And that can be a simple thing as such as a one-pager around risk management. Insurers are thinking much more now about things like ESG policies, culture you've got among staff and employee well-being, use of data and technology, looking at how you utilize technology to help manage risk. So it's not just saying, we do something really great here, we've bought this particular case management system, for example. It's going a stage further than that and saying, and as a result of that, this is the impact on the firm, and this is why it reduces risk. So yeah, saying something like, we utilize inCase or any of the big management information system pieces that are out there, and we put this into our practice management system is great. But saying that alone probably doesn't mean much to the underwriter. They kind of go, great, they've got inCase. So what? We utilize inCase, therefore our clients can see where the transaction is at any given time and are kept fully up to speed. Therefore, if there are any minor issues, they're nipped in the bud really early, which means that a complaint or a claim doesn't develop, is a much more mature and sophisticated answer that the underwriter will get. So it's just going that stage further. And, again, making sure your proposal form is professionally presented, including information about who the key people in the firm are, making sure that your financial information is up to date and presents a good story. And if there has been anything that might be considered an adverse risk feature in the proposal form, such as you've got a sticky claim that you've had to deal with in the last few years, or your accounts and financial position hasn't been quite as rosy as it might have been, bring that out and explain it, and explain what the plan is around that and the lessons you're going to learn from it or have learned, and why you've got the firm on a different trajectory or what the challenges have been, because the proposal form and the information will leak those pieces of information out and the underwriter will see them. So you may as well be overt about it to make sure that you're addressing them and you're being honest, because underwriters are people at the end of the day and they will understand that story.
One thing we did with one of our firms is that they did exactly what you said. So, they said, we use inCase or our own app, and, it means that we can have up-to-date communication. What we then did is actually take that a step further, and I think this is, hopefully you agree, is a good tip, not just for our technology, but any technology provider, is to have a conversation with the provider or supplier and see what risk mitigation their product provides, because they'll know generally, because for us, we have to do ISO questionnaires, etc., and data processor impact assessments. And we were able to provide information like encryption details, biometric logins, etc., and really kind of show the technology advantage compared to what the rest of the market's doing. For example, sending things to clients' personal email addresses, and changing the behavior of clients, which then mitigates the risk. So being able to change clients from being reliant on email communication. So you hopefully enjoy that phishing scam. So do you ever see many of the kind of proposals coming across your desk that they're actually, you can see they've gone into quite a lot of detail to show what technology risk mitigation puts in place?
The honest answer is no, you don't, and that actually makes it much easier as a law firm to stand out amongst your peers. It's a bit like that thing of if you're the only house in the street that has CCTV and a burglar alarm and none of the others do, you're going to appear much less of a target to a burglar. If you're one of the law firms that's doing these things, and this is part of the insurance industry is to blame here, because insurers are quite archaic animals. For years and years, professional indemnity for law firm has been quite a commoditized product, where you've had the proposal form, some financial information, some claims information. That's pretty much how insurers have made decisions around whether or not they insure a firm and at what price. So anyone that does go a bit of a stage further, and we do see probably, I would say for us, we look after some larger, more sophisticated firms. So we probably see more of these proposal forms than some other brokers do. but I would say probably 2 or 3 in every 6 or 7 firms have got this, so around about 40–50%. And they're the larger, more sophisticated firms, bear in mind, do go that extra mile and work with us to stand out. And those firms that do that and say, this is the technology we utilize, this is what it means, here's a copy of our business plan, here's a copy of our employee engagement plan if you're big enough to have that in place, here's how we treat our staff, here's how we look at our culture, and here's how all the data that we've got drives these decisions, because insurers love data and they love information, but they love even more when a firm can say to them, this is the part of the journey we were on, this is what we've employed to gather this data and utilize it, and this is where we're going. That will really make your firm stand out. And whatever type of technology you're using, whether that's to analyze the claims that you've had in a firm and the lessons learned, run your conveyancing department, run your practice, if it's how the management team get and gather their information, whatever you can do that does that will make you stand out amongst your peers, definitely.
And that's standing out amongst your peers, Gav. Does that then kind of translate into underwriters being able to assess your risk a lot better and maybe, you know, assess your premium a little bit more competitively, or is it just more of a speed thing with decision making?
I think as the market gets more competitive, information like that will definitely enable underwriters, A, to have a want and a desire to write your business in the first place. And that's the first hurdle to get over. We've had such a hard market that it's been really easy for lots of insurers and underwriters just to say no to new business to them, just to look at a form and go, that looks pretty standard. They're like everyone else, but they do a bit too much conveyancing, therefore it's a no. If you've got all that additional information around it to shore up your application, your chance of piquing the underwriter's interest is much higher. And then when you do, we're probably a long way off. And this is, I'm asked this question quite a lot about things like Lexel, for example. There's information still floating around in the market that says, if I have Lexel, will I get 10% off my PI premium? Now, the problem is you probably don't get 10% off anyway, but it's also very hard to look at a firm's application and say, this is where that 10% sits and where it comes off. What it will do, again, is it gives your broker and you a much better chance to go to your insurer, even more so as the market gets more competitive, and say, we need a competitive premium here, and here are a bunch of other reasons why beyond the proposal form. So it's that going beyond the proposal form thing. And even with your existing insurer at the moment, you know, we've seen this with a couple of insurers as at the 1st of April renewal, and we're starting to see it for the 1st of October. If we can say to an insurer on behalf of a firm, here's their proposal information, everything's pretty much as it was last year, but by the way, they're doing all this, we're starting to see some insurers, they're not giving an actual rate reduction against the firm's fee income, but what they are saying is, okay, we'll take that in the fee income and we'll stay flat on our rates, and that will enable us to maybe offer an 18-month policy, offer a lower excess, or remove some loading that was previously in there, particularly if that's around claims activity. So if you've had 1 or 2 claims around things like conveyancing in the past, and you can demonstrate how your data and your MI has enabled you to improve that culture and that position around preventing a claim occurring in the future, you'll have a really strong story.
Great, brilliant. Thanks, Gav. I know Matt Slade's just put a question in. So his question is, what are the risks of overseas clients? How does a brokerage or an insurance company or underwriter see a risk when you're dealing with overseas clients, especially?
Overseas clients is a fairly broad term. And I think that to answer it, you've got to say, how does it sit within the rest of the firm's scope of work? So overseas clients to some firms can just mean you've got a client that's based overseas, but is buying a house for their parents in London. Fairly standard, fairly straightforward. Some overseas clients will be involved in complex commercial transactions, for example. And there's a natural wariness of insurers where you're doing things that are outside of England and Wales. If you're involved in other jurisdictions, you're doing complex work. So just think about the nature of what the overseas work is. And again, explaining it to your insurer. This is also a little bit like the Building Safety Act and firms that are taking on work for buying and selling flats nowadays with all the encumbrance that comes with. It's not for your insurer to stop you doing that work. If a commercial opportunity is clear, you've analysed and you're managing the risk. Where insurers get really nervous is what they would call either dabblers or people who are being mercenary. So the Building Safety Act is a good example. So we're getting lots of questions from firms at the moment saying, well, the 5 other firms in my region are all turning this work away and I want to do it because there's an opportunity commercially there to do it. what we're sort of counselling them on in that regard is saying, if it's within the normal scope of your business plan and you would have done this work anyway, and you're doing it in a slow, controlled manner and there's a clear risk analysis around it, it's not for your insurance to stop you doing that. If you're being gung-ho about it and you're saying, we're going to go do all this work because there's a real opportunity here and we want to make a land grab and make some quick cash, that's a different, more riskier proposition. And similar to overseas work, you know, if you've got the experience and the team to do it, if you can demonstrate that you've analysed the risk, if it sits within your normal portfolio of work, if it's, for example, that you just have a client who happens to live abroad, as I say, is buying property for family back here or buying a second property, and it's just in all intents and purposes a normal conveyance, that's fine. If they're suddenly starting to buy and be involved in complex commercial transactions or collective investment schemes or buyer funded developments, that's a slightly different thing. And it's just understanding and looking at it, going with some external eyes and saying, is this actually outside the scope of what we do? If I were insuring us, would I feel this was a bit riskier because it's not normal for us? And that's where you want to be giving your underwriter lots of comfort.
So if it's work that you've generally been doing for a while, then generally an underwriter would feel a bit more comfortable with that, yeah?
Yeah, they should do. And again, that conversation should be able to happen. And for most firms of a certain size, there's no reason you shouldn't be able to speak directly to your underwriter with your broker present as well. I'm not a fan of, you know, brokers that guard the market and say, oh, we can speak to your underwriter. Most insurers of worth, and that's most of them now, there are very few there are no unrated insurers out there, and there are very few inexperienced underwriters out there for solicitors PI. Most of them should be willing to get around a table with their clients and discuss the issues and say, right, okay, you're looking to do this. This is how we see the world, and can we reach an agreement here?
Great. And is that similar? Because last year, from memory, quite a lot of the firms that couldn't get cover had been doing the kind of the hotel room kind of conveyancing. And if obviously a firm is thinking about maybe doing overseas, because obviously, you know, the economy as it is, there might be a lot more overseas, especially buyers and conveyancing coming into the market. You know, would things like getting an external kind of consultancy to come in and help and give an opinion, would that help with the underwriting?
I don't know if they need to go to the length of getting an external consultant in. If the work's going to be big enough and if it's a big enough change for the firm that the consultancy can provide other input, then yeah, by all means, you know, go for it if it's a bigger commercial benefit. To your first point of firms that couldn't get cover, I've seen in the last 16 years of placing solicitors professional indemnity, I think I've seen 2 instances where a firm couldn't get cover and was actually forced to close in the market. So back to my earlier point when I sort of gave the intro, I think that idea of firms not being able to get cover is a bit of a misnomer. What you've got to try and do is engender a good relationship with your insurer so that they don't get so turned off by what you're doing that they either charge a whacking great premium or you have to switch insurers the year after. It's easier to do that in a more benign market, but switching insurers recently has been very, very difficult for lots of firms. If you're looking to undertake that kind of work and it's a bigger play because you're doing more overseas clients, etc., I think the best thing you can do is sit down with your broker and sort of ask them about the market and how it's viewed. So you picked up there on the hotel room leases and that kind of thing. The reason that insurers are nervous about that work now and lots just don't want to touch it is it was generally taken on by smaller firms who had 1 partner or 2 partners that said they could do this work. They thought it was being well risk managed, but there wasn't quite the supervision there because the managing partner or director who was employing these partners didn't have experience of that work. And then lo and behold, insurers have been left holding the baby when these claims do come out, because there are law firms out there who are doing a bit of what I'd call professional ambulance chasing and are saying, we know these buyer-funded development claims are out there. Did you have a lease on a hotel room? Have you got the investment back you wanted on it? If not, we'll chase the law firm that undertook the work and claim on their PI. And whatever your moral view is on that, it's out there and it's happening. So insurers are naturally concerned about the exposure there. So if a firm was still seeing opportunities to do that kind of work, those unregulated collective investment schemes, I'd be discouraging them because it's not that they wouldn't be covered under existing policy, but they'll find it very difficult to get competitive, meaningful alternative PI in the future.
Yeah, great. And Gav. Amanda, I think you're here.
Hello, you all right?
Yeah, how are you doing?
I've had better days with tech.
I work for a tech company. I can't say anything anymore. Amanda, it's really good to have you on board. And I think I'm going to give Gareth a bit of a break now because he's done an absolute solid one for us. But Amanda, great to have you. I think I'd really appreciate if you could just give a bit of an introduction to everyone here, and then I'll chuck the next question at you quickly.
Okay, fair enough. I'm Amanda. I work at Chadwick Lawrence. I'm operational project manager here. Everything that I do is about tech, so future-proofing the business in terms of technology, to make sure we are as resilient as possible, but to also give our staff a better work-life balance and our customers a better client journey.
Brilliant. Thanks, Amanda. And really good to have you here. Thank you. And thank you for persevering.
No problem.
So regards to kind of PII renewal, how important is it in Chadwick Lawrence to put kind of technology in your renewal proposal forms? And also, how important is technology in just generally risk mitigation for Chadwick Lawrence?
So we put a lot of work into our PII documents when it comes to dealing with tech. So far as we probably give too much information, but we feel it's very important that they understand that we're taking things very seriously. So we will put forward our strategy plan. We will highlight our commitment to infrastructure for the year to date, the years coming forward that link in with the 3 to 5 year business plan. We go as far as discussing and showing evidence that we have an agenda point every month in our board meeting that looks at the tech stuff and how important it is that we've got contingency plans and that we test these regularly. So we do quite a lot of like disaster plan training within the team. So we'll run simulations of what happens if A and B happens, what's C, and we do those constantly, led by our IT team and our head of IT.
Brilliant, great. Gareth almost sounds like a perfect firm then,
Yeah. Yeah, and that, as we were alluding to earlier, that the things that Amanda's just listed there, I know you weren't on the call when we were chatting about this, Amanda, but those are the additional over and above things that an underwriter will look at and will go, actually, do you know what? They do have a disaster recovery plan in place. They are constantly testing different scenarios. This is a firm that's not thinking just about what they're doing today, but they understand that you can be the best run business in the world and something still might go wrong. And you can't plan for every eventuality, but they are saying, okay, this could happen. The simple fact is law firms are a huge target for wrongful funds transfer and for hacking and everything else. What if we do get hacked and we're held to ransom one day? What are we going to do about it? And it's that kind of thinking that insurers want to see across not just professional indemnity, but cyber insurance. If you're a larger business with more property or office type renewals and your commercial combined policies, just that sensible business planning element. And so many firms do it, but don't talk about it as well. So if you're doing these things, shout about them to your insurers because they really will make a difference.
Great, brilliant. So start with Amanda. Amanda, can you maybe share some strategies or steps that you would recommend the firm to do in advance of the renewal season? Is there something that you would go to try and get the data or information together to help you, or something that you'd kind of produce? What would you recommend?
So we have a project management board and a project plan, and we continually look at this every month. We make sure that we touch on the biggest areas that will create us risk from both a tech and a what if something happens. So cybercrime is huge. So the Cyber Essential Plus stuff, it's really, really important that we've ticked all those boxes. We're as up to date as possible with that we possibly can be. Fraud, we all sit there stressing at 3 o'clock on a Friday afternoon when you've not heard about that completion, just checking that money's got to where it's supposed to. We're constantly looking at our internal processes when it comes to how technology links into sending payments across the nation. And what we also look at is we will kind of link training into all of this. And I know that sounds probably quite stupid, but we think it's really, really essential that we continuously personally develop our teams internally. So we will regularly on busy peak times of the week send links through Mimecast. And obviously when we're setting up the tester, they're not harmful links, but we use it to make sure that the teams are constantly thinking about before clicking that button, and taking that link off that then brings someone into your server and your systems. So we're constantly looking at things like that on a regular basis.
And then things like that training, so sending out those kind of spoof links, do you then, that's documented in your PII renewal, I take it, and you're using that as an example?
Yeah, and we do it internally as well. So not only do we log who's clicked the link, we will then go back and refresh train that person, and we will, I won't say we target them, but we will ensure that we're constantly at those people that are not thinking before they click the link, but we will download the report to show that we do that, because it's very important that, you know, that you can evidence the fact that it's not just the fact that you're delivering training or creating training, it's that your teams are understanding the value of that training and where their accountability comes to the business in terms of stuff like links and looking at a client email address to make, you know, if there's an extra letter in Chad Law, well, that's not us. And we're constantly testing them to make sure that they are on point with things.
Great, brilliant. Gareth, any strategies or steps you would recommend?
Yeah, I think the point that sort of Amanda raised there around constant training, particularly on cybercrime issues, is really relevant. Just by way of example, we do the same in our business in terms of sending out the spoof links. The most popular one that always gets clicked on is Domino's Pizza, 2 for 1 at 3:34 p.m. on a Tuesday. So because Domino's send those links to everyone's personal email addresses, if you send it around the business as a spoof link, which our IT providers do every couple of months, the click rate through for that is absolutely phenomenal. You would not believe how many people still fall for it, still do it, despite the fact their work email address isn't registered with Domino's. They just see the logo and they click. And I think that just proves the point of, particularly with cybercrime, as a business, you've got to defend every single potential attack that's out there and try and not let someone into your system. The hackers only need to succeed once. And if you're getting those kind of click-through rates, even in a business that we've probably sent out, I don't know, 11 or 12 of those Domino's emails, and the click-through rate is still 40, 50%. It's like, wow. So there's a recognition, I think, with particularly cybercrime, that you will fall foul of it as a business. I think it was a saying by either IBM or Microsoft, wasn't it? It's not a case of if you get hacked, but when. And that probably will happen in some firms, and we see it more and more and more. I think all that businesses can do in terms of their PI or any other insurance is demonstrate that they're doing all this good stuff and that their training is there and that they are on top of these things. And again, it's making it live. You know, it's really interesting when we talk to firms about tech and cyber issues, because quite often what they will say to us is, okay, here's our IT manager. Here are the firewalls we've got in place. Here's our MSP. And there's value in those conversations, but actually it needs to be a real board level conversation. As Amanda's demonstrating there with what Chadwick Lawrence do, it needs to be the people at the top of the business are cascading this down and they're taking personal responsibility, and it's a board level conversation in terms of strategy, not just we've paid an MSP, they've got a good firewall. If that breaks, we don't really know what we're going to do, and it'll be the IT manager's job to sort it out. It goes beyond that now. And there's a real recognition from professional indemnity insurers that if you can demonstrate you're doing all of this stuff, then you are a better risk. And lots of professional indemnity insurers now are asking if firms have got cyber insurance in place as well. There's one insurer out there that says they won't provide a quote if you don't have a cyber policy that gives you at least £250,000 of wrongful funds transfer cover. There's another insurer that offers 2 levels of pricing, depending on if you have or haven't got cyber insurance in place. And when you think about the way that the tech world's driving forward all of commerce, it's only going to be a matter of time, I think, before firms pretty much have to have cyber cover in place that's relevant and appropriate to be able to get a decent level of PI premium.
Yeah, I think also on that point, with cyber policies as well, there's always stipulations, isn't there, on what you need to do and what policies and procedures you need to have in place. And there's a few firms I know of that have got cyber cover but haven't really looked at those stipulations and requirements. And then obviously then the policy is null and void, and then so is your PII, because you haven't actually got active cover. Yeah,
well, your PII will never be completely null and void. It has to pay for a client loss on your client account in the event of a claim. But the cyber policies are not a standard product like your PII. Every policy is different. Every insurer's got a different definition of hacking, phishing, vishing. Every insurer's got different conditions. By way of example, we won a client's insurances last October, and they had a policy that they were paying £90,000 for on the cyber insurance, but had a £50,000 co-insurance clause on there. So for a claim valued at £50,000, the client had to pay 50% of that claim. So as well as paying £90,000 for a policy, they'd have had to pay £25,000 for that claim, plus their excess, which I think was £5,000. So out of a £50,000 claim, the client's paying 30 of it. It's only when you dig into those sort of things, and we got that resolved for that particular client, that you realise how sporadically different cyber insurance is across different insurers. It's not a one-size-fits-all product. So don't just think that by buying a fairly cheap policy that you've not really looked at, you're ticking a box and you've got cover, because that needs much more specialist advice.
Yeah, exactly. I think also, Amanda, your point on Cyber Essentials Plus, I think is a really important one. I think more firms need to look at it. You know, if anyone doesn't know, Cyber Essentials Plus is basically a government initiative regards to cyber security. I personally believe it's not that difficult to obtain. You know, whether you're a really small one-man band or, you know, you're a big firm like Chadwick Lawrence. But actually it gives you the basics of protection, doesn't it? You know, and just makes you think about the Cyber Essentials. So again, yeah, anyone I think who wants to discuss Cyber Essentials Plus, we're more than happy to help. And I think, you know, Amanda and Gareth will probably give advice on that as well separately. Next question, I'm going to word slightly differently to both of you separately. I think, Amanda, what do you think are the biggest future changes regards to technology and technology that mitigates risk coming up in the marketplace over the next couple of years?
Ooh, okay. So some of them are out there at the moment, but they are growing in size. So obviously, you guys are inCase, great. You know, there's potential to do a lot more things via apps for clients. It is huge. It is cost effective. It is very getting down to the clients that are now coming through the ranks. You know, that are limited and obsessed and attached to iPads, iPhones, Android phones, anything that makes anything for clients easier to move things along. Other things, analytics is huge at the moment coming out there. Linking into bank accounts to verify source of funds. We all know it's one of the biggest bugbears in the conveyancing side alone, where you've got to verify your client source of funds, and you get an email back with 25 JPEG attachments that are all in different sizes, some are blurred, and you can't really read it. The initiatives like this that allow clients to give you access to go into their banks and provide a report on what actually sits in that bank account, what sits in that savings account, what sits in that life support, that is huge. Not just from a tech point of view, but also from an insurance point of view. You know, we're not financial investigators, but it's becoming that in this industry and checking client source of wealth. Another big one for me is knowing your client. All these online ID checks where it goes that little bit of an extra mile to say, you know, this client's been linked to this article in the press or this article in the media. You know, it's more and more important now that you get to grips with the client that you are acting for. That Mr. Smith is Mr. Smith, who's 75-year-old chap who lives in London, not, you know, somebody else. It's so risky in our industry at the moment, with people being able to be somebody else or portray someone else, and every little bit of information that we can get from a tech point of view that links off to Equifax, that takes you off to the passport office, everything that verifies who your client is very, very important from us. And I just think these areas will continue to grow in our industry to make our daily lives a little bit less stressful, hopefully.
Exactly. I couldn't agree more. Thanks, Amanda.
It's okay.
And Gareth, slightly differently worded to you. So what do you see as the biggest future changes in PII cover and the use of technology?
So I think that, so sort of two-part answer to that question, I guess, Rob, and I'll pick up on some of the points that Amanda's mentioned here, is that although the insurance industry is using things like future tech, or what we see as tech now around AI and everything that's going on there, which I'll come on to a moment, professional indemnity underwriters in their nature are quite archaic. They've worked from paper proposal forms, they still do, and getting that part of the insurance sector to catch up with even the 20th century can be a challenge, let alone the 21st, but they will have to do so eventually. And the issue that you've got with a lot of the points that Amanda quite rightly picked up on is that the conveyancing sector in particular, which drives the most claims for insurers, is so segmented with so many different stages required. And often the things that drive claims within that are actually down to either too big a workload, the pressures of the day job, bad admin falling over, rather than bad legal advice. You look at where insurers tell us claims come from within conveyancing, and they're not usually driven by bad legal advice around how titles should be constructed, although the report on title is an issue. They're driven by things like key dates being missed, wrongful funds transfer, and cyber claims. And this volume and pressure that law firms experience that means that things can just crack sometimes. And Amanda's exactly right in what she said, in that the use of tech, anything a law firm can do that outsources that risk. Third-party managed accounts are a great example of this, and there are various providers out there for those, whereby a law firm is saying, okay, to manage our money in terms of conveyancing particularly, but other areas of the firm as well, we're going to outsource that to a third party. Yes, the law firm from a regulatory perspective still carries the can with the SRA, but they're actually passing on some liability there by saying, okay, Mr. or Mrs. third-party managed provider, you can deal with our accounts for us. That lets law firms get on with being lawyers. And I think that as the technology changes across all commerce and in the world, insurers will slowly catch up to that idea. The professional indemnity policy, the biggest bugbear I have of it is that the wording is so wide that it places so much liability on both the law firm and their insurer that if almost anything goes wrong in any of the work a law firm conducts, regardless of, I'm dealing with a claim for a client at the moment around tax advice on the dispensing of an estate on a probate claim. And it's pretty clear that a surveyor has undervalued the property concerned by about £3 million. They valued 2.1, property's been sold for 5 million, and HMRC are now claiming against the executors saying you owe us the additional tax. The executors have pinged the claim back to the law firm because they've got the widest PII cover. The law firm's actually acted with loads of integrity and gone on and got lots of different valuations. The client has chosen to go with the cheapest because it suited them from a tax point of view, but yet the law firm is still on the hook for a potentially, I think it's about £230,000 claim. And while ever you've got a regulatory position of the SRA saying insurers have to provide such wide cover, you're always going to have these issues that we've currently got in the market around premium. You add in, again, all the points that Amanda raised about the way that technology is moving forward and the risks that creates for underwriters. And I can't necessarily immediately see a position where you can get away from that and start to reduce cover down. But I think if firms can be smart about how they utilize technology to genuinely reduce risk and demonstrate that to insurers, because it makes them more able to get on with the day job, you'll be in a much better position.
Brilliant. I think there's a separate webinar there about outcomes-focused regulation and what it means for insurances.
Yeah.
But yeah, we'll do that today. Thank you both very much. I think it's been great. And, you know, I really enjoyed the conversation actually and some of the topics. What I'd really like to end on is if we could try and summarize maybe 3 top tips for firms when they're coming through to a renewal that you'd suggest they go through. Gav, do you want to go through?
Yeah, I think take the time to understand the insurance market and how your firm sits against your peers. Engage with a good broker in order to do that and get your message across. And make sure that you're doing more than just sending the proposal form and your accounts information. Tell your story.
Brilliant. Thanks, Gav. Amanda, top 3 tips?
So for me, work closely with your key suppliers, so the third parties that you are working with to get your transactions through. Identify best practice, work together. We might all compete for the same work, but we all need to work together. The stronger we are in the conveyancing arena, the stronger each individual firm is. And challenge the norm. Don't be afraid to have a go and test things, you know, that are up and coming. So don't be fearful of the words like ChatGPT and stuff, because the world is evolving, and if you don't evolve with it, you know, where does your business end in 3 to 5 years' time?
Yeah, exactly that. I think I can't support that message enough. Get your suppliers to do some of the work. Tell your suppliers to come up with, you know, what is their product doing, what's the risk mitigation, what can they, you know, what can they support with regards to renewals? But, you know, fantastic. Thank you both very much. Thank you to everyone who's taken time to watch. We will follow up with the recording, so you've got that, and then also in the next couple of weeks we'll follow up with a data sheet with kind of some of the top tips and some of the key phrases and information that we've given out today. Thank you very much again, guys, and yeah, everyone have a lovely afternoon.
Thanks.
you.
Yeah.
See you later. Bye.